Welcome to episode 3 of the Clutch Entrepreneurs Podcast. Today we have a very special guest, one of my good friends and mentors, Uncle Charles, aka the Godfather of real estate is what we call him down here. So Uncle Charles has facilitated close to 400 subject to transactions since 2013. Okay, he's wholesaled over 1,000 houses nationwide. He's flipped over 100 houses personally, and he's built a sizable portfolio without using banks, lenders, or his own credit, primarily through subject to and creative financing. So we got a real estate genius, what I like to call him. Any question I've ever had, like in any transaction, I can call him and he'll answer it. It's crazy. So my special guest today is Uncle Charles.
How you doing? Thank you for inviting me to the Clutch.
Yes, sir. Yes, sir. Me and Charles go way back, right? Yep. So we go back since I first started in real estate. They were the first ones I ran with, pretty much. They took me under their wing, mentored me, helped me out. So I got nothing but love, right? So it was amazing, and it was really cool for them to help me out the way they did. So we go back. When was that? That was like 2019. I
think it was 18.
18, the end of 18. Because I've been in real estate for about 4 years now.
Yeah, about 18.
Yeah. So man, so it's been a good journey, man. Seeing the growth and everything.
It's been a pleasure seeing you grow, man.
Thank you, man. I appreciate that. So Uncle Charles, I like to start off the podcast to get my viewers to understand who Uncle Charles is, all right? Because you've come a long way.
Yeah.
You've told me many stories of all the companies you've built and how far you've come. And so just to let the viewers know, who is Uncle Charles growing up? How was it growing up for Uncle Charles?
Well, I mean, it's no secret. I disclosed at Wholesaling Live, a lot about my past.
Mm-hmm.
I come from a world that I call Violentville, USA. So, as minorities, Latinos,
mm-hmm.
or anybody who's a minority, we know that world can be chaotic.
Mm-hmm.
And so, I guess, to be perfectly honest, I mean, I was a product of that environment for a long time. And it's very hard to escape that world, and eventually,
mm-hmm.
I got caught up. It cost me a lot. It cost me opportunities, cost me time, it cost me my life, and but somewhere along the way, something clicked in me. I knew I was meant for something more, and I started a little late, but then eventually I got into school. And I found that school, even though today a lot of people don't believe that school is important, but I found that educating myself, I was able to take stock of myself,
Mm-hmm.
And I eventually graduated from the University of Texas here in San Antonio.
Really?
With a bachelor's in business and finance.
Nice.
And then I went into mortgages. I
mm-hmm.
knew that I had to do something. I knew I had to build something.
Mm-hmm.
And I'll segue into something real quick. A lot of times people ask me, how do I do this business or any business?
Mm-hmm.
And I always tell them, those who won't find a way won't do it. Those who want to be told how to do it will never do it. Did I make that sense? Those who find a way, I meant to say those who find a way will do it, and those who just want to be told how to do it will never do it.
Mm-hmm.
And so I knew I had to do it, and I jumped into credit, then I jumped into mortgages. I became very successful, and then the crash destroyed me in 2008. I gained all this stuff right here, and then I started HBHS in 2012.
It's been since 2012?
Yeah, and right around 2010, I had lost all my money. And in 2008, the government stepped in and shut down the lenders. I was running a couple of mortgage banks,
mm-hmm.
and a mortgage bank is not like a commercial bank. It's a laptop and some loan officers.
Mm-hmm.
And I had a broker shop. It was being very successful. When the crash came, it just destroyed the whole industry. And I found myself, from making $20,000, $25,000, $30,000, $40,000 a month to making nothing.
Dang.
Government stepped in. I had leases for 3 offices, and people don't realize that, $3 million is not a lot of money. I thought I was on top of the world, but $3 million, I lost 3.2, and some assets. It's not a lot of money, especially when the government steps in. I filed bankruptcy, then I filed bankruptcy again. I saw 7 and 13, and truth be told, on this, I think it was December 2011, I had $700 in my pocket. Nobody knew. I decided to buy an LLC, and it's called Home Buying, Home Selling. And in January of 2012, when I went active, by the end of the month, I had $30,000.
Damn.
I just had to make a switch, man. I was like, hey, man, I was teaching people how to do real estate, investing, and private money, and I just made the switch, and I just said, you know what, I gotta do it, man.
So you got 30,000 how quick?
Very quick, like within a month.
Dang. How did you do that?
Because what I did is I opened up my company, right? And I had a friend of mine who was a broker,
Mm-hmm.
which you actually know. And I said, bro, can you sponsor my LLC?
Mm-hmm.
And he said, yeah, because I couldn't get licensed, you know what I'm saying?
Mm-hmm.
And so I couldn't go into mortgages because they had created the national license. So he sponsored my LLC as a broker shop, and I hired agents.
Mm.
And because I was real strong in mortgages, I had all the agents sending me deals, and right away, boom, boom. And then my partner Michael came on board very shortly after. We became partners. I'm just like, here's all the deals. And so that's how we actually started Home Buy Home Selling as a realty company.
So wait, but you said you couldn't get your license?
Yeah, I couldn't get my license.
Why couldn't you get your license?
Because I was a bad boy when I was young.
Oh, okay. Makes sense. Okay,
Yeah.
but there's a way around everything.
Hey, man, look, that's why I always say, for those who figure it out, and they will figure out how to get there, they'll make it.
Uh-huh.
For those who want to be told,
Mm.
they have a hard time making it, man.
It makes sense. So like where there's a will, there's a way. I'm gonna figure it out.
If you're
I'm
gonna,
figure this
if
out.
you can figure it out, you can figure it out, man. If you're not willing to put the time in to figure it out, you'll get stuck.
Okay, so you started HBHS at rock bottom. Then you had $700.
I had $700, and so at the beginning of January of 2012, I had $200 in my account from having 3.2. And how did I lose that? Look, that's a whole other story.
Yeah.
But let's just say when the govy comes calling, and they go into your account, it gets real serious.
Oh, do they freeze your account, stuff like that?
They don't play, man.
Damn, I'm
Yeah.
scared. Oof, knock on wood, man. That's scary because
Yeah.
they're bullies. They're bullies.
I didn't say that.
So okay, you go from $3 million to $700.
Yeah.
That's
And
a lot of.
I've told that to some people before, and they're like, "Man, that's stupid." I'm like, "Look, dude, you don't know the story, man."
Mhm.
So, I had 3 leases, I had employees, I had that, and you always think, you don't shut down because you have 2, 3, 4, 5 bad months.
Yeah.
And, you always think like, "Man, I'm gonna make it up. I'm gonna make it up."
Mm-hmm.
It just kept going, and boom, 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 and then I just found myself, and I lent some money out, and I found myself filing 7.
Mm-hmm.
They make you get rid of everything, and then 13. It just spiraled out of control, man.
Yeah. Well, to me, like when I listen to podcasts and I listen to audio biographies of successful people, these parts of the story are the best because that shows your true character, and it's the most inspiring because we all go through that in life.
Yeah,
There's somebody watching this video right now. They're going through some stuff.
brother. If you're going through some stuff right now, trust me, man. Let me tell you something. There's a brighter day. What you have to do is just take stock of what you're doing. Sit down, relax, clear your mind, and make a decision.
Mm. And you know what, that's one of the definitions of what clutch is and what clutch stands for. It's like when you're going through some stuff, that's what you call that. It's pressure.
Mm-hmm.
You got to make a move. And if you don't, you lose the game. But you know what I mean? You got another day. If you got another day, there's another game to be won. And here he is, successful again. That's clutch.
Well, thank you, man. Look, man, you got to take life's lessons and roll with them, man.
Yeah. No, I agree completely. So, guys, what do you think about that? How many of y'all are in a situation like that? If you like this podcast, guys, make sure you subscribe and you drop some comments. Share this with all your friends because it's about to get really, really interesting, all right? So, Charles is like really, really good and specializes in creative financing. So, for the viewers that don't understand what that is, can you kind of like break that down simply to what it is?
So for most individuals, and I'm not going to talk about traditional real estate because that's what most people think real estate is. But
Yeah.
For me, it's 2 roads. There's 2 different vehicles on the same road. That's what I meant to say.
Mm-hmm.
You have traditional and you have REI,
Mhm.
real estate investing.
Mm-hmm.
But the wall of REI is made up of a lot of different strategies.
Mm-hmm.
Now, when people hear about creative financing, sometimes they don't understand that you can't really hunt for creative financing. You just have to know how to create it when it presents itself.
Gotcha.
Once those opportunities present themselves and you know how to structure these deals so where it's advantageous for the seller but acceptable to you, that's when you're creating paper.
Mm-hmm.
And what I mean by creating paper, I mean you're creating transactions that you can keep and continue to profit from every single month, years on out.
So like, can you give me like an example of what, like a deal? Like, what does it look like? So it's kind of like terms, right? Like you create terms.
Yeah, you create terms. I mean, it's just so many ways. I'll give you an example. Like we just did one in Corpus Christi.
Mm-hmm.
The lady wanted like 185. It was a fourplex. It wasn't performing at its optimal, rental capacity.
Mm-hmm.
And I'm like, look,
It's cheap.
yeah, it's cheap. I was like, hey, I tell you what, I'm not willing to give you 185 because you have 2 units that are not performing. They need to be rehabbed.
Mm-hmm.
The other units are underperforming. To make a long story short, I said, look, I'll give you 225.
No, you gave her more.
I'll give you 225 if you give me the time that I need to get these properties performing. And what I'm looking for is this. Because she asked me how much time you need. I said, I want 7 to 10 years.
Oh.
And she said, why? I said, because I need those properties to appreciate. You're in a stagnant area here in this location. I showed her that there was nothing really popping there.
Mm-hmm.
So what I did, I said, look, I quoted her a price. Give me a payment. I quoted her a payment. And the payment that I quoted her was amortized at 240 months
Mm-hmm.
with a balloon at 10, right?
Mm-hmm.
And what that does for me, it allows me to get the homeowner to start, or the owner of the property, concentrating on a payment,
Mm-hmm.
not on interest.
Mm.
You see, I want to give her a payment, and she said, I'll take that. And so I said, I'll take that. And so now every single payment goes to principal.
Mm.
But here's the thing, what a lot of investors don't understand is that I know that property is going to appreciate over the next 120 months.
Mm-hmm.
So as the property is appreciating and I'm paying straight payments towards the balance, I know at some point, I know exactly when I'm going to do this. I'm going to give you guys some goal right now. I know that I'm going to refinance that property either at 60 or 70%, maybe in 6 or 7 years, and then I'm going to come back to her. And I'm not even going to offer her the payoff at that mark. I'm going to say, hey, I'm going to discount it. I'm going to say, hey, I got cash right now. So, for example, if in year 7, let's say I owe, I don't know, 120,
Mm-hmm.
I'm going to come back and say, look, I got $80,000 right now, cash. Would you like to settle? So, did it really matter that I offered her 225 in the beginning?
Dang.
And when they ask me, what about the interest? I'm like, what do you mean interest? I mean, I'm not asking you for a loan.
Yeah.
I mean, are you going to give me some money or what?
Yeah.
So we get away from interest. Sometimes I'll ask you for down payment. And sometimes I will put a down payment, but they ask me for down payment. I'm like, look, I cannot do this deal like this. I need this money to fix your property. It's your property. I'm going to put money into your property. I said, why don't you keep the money? And they're like, well, what do you mean? Well, I mean, if I give you money, you're going to have to give me a credit.
Mm-hmm.
Why don't you keep all the money, right?
Mm-hmm.
I'm buying at 225. You don't give me a credit.
Mm-hmm.
You're going to make me put money into your property.
Mm-hmm.
And now I'm paying you on 225, right?
Mm-hmm.
And you want 25, but I'm going to put 25 into your property. Now you get to keep the whole 225, not give me a credit to 200.
Mm-hmm.
Doesn't that sound better to you?
Yeah.
Doesn't it?
It sounds better to me.
And so they're like, okay, well, I'm going to keep 225. You're going to put money in my property. Yeah, that sounds good. Let's go.
So what is like interest rate on that? What was like the
0?
0?
Yeah.
Dang.
Remember, I'm
that's
quoting
really-
payment.
Yeah.
I never talk about interest.
Mm.
Look, for legal reasons, you got to get with your attorney. There's a small little interest you got to put there. But here's the thing.
Mm-hmm.
I never talk about interest. I never talk about down payment. I only talk about the payment. I never talk about down payment or interest. I talk about what I'm willing to do.
Mm-hmm.
Because at the end of the day, I'm going to make a deal that's advantageous to you, that's acceptable to me. But guess what I'm going to do? If I'm ballooning at 10 years, I'm going to come back at about year 6, year 7.
Mm-hmm.
I'm going to offer you cash at a discount.
Yeah.
So did it really matter that I offered you 225?
Yeah. You offered the 185.
Because I'm going for a second crack at the apple.
Yeah.
You see, but you got to be willing. You see, you got to be willing to play the long game for that.
Yeah.
If you're not thinking long term, you're thinking short term. You can't ever do those type of deals.
And that, ladies and gentlemen, is how you create wealth. Wow, that's crazy.
Well, I mean, Michael and I in the last 2 weeks, we actually liquidated 3 of these properties, and each one of them brought us over close to $100,000 on each one.
On each one.
Mm-hmm.
Wow. And how long did you own those properties?
Since 2017.
So that's only 5 years, 6 years.
Because the properties appreciated.
Yeah.
And the balances were paid down.
And you made $100,000 off each one.
Close to 100 on each one.
But you know what? That's key, guys. So like, if you understand interest rates and stuff, so at 225 at 0%, that's really good for you, because over 10 years, let's just say 3%, something super low.
Yeah.
How much would 3% be over 10 years? I mean, that's a lot of money.
I can't do it without a calculator, but I would know this. That if you
money.
know what the appreciation rate is for that property,
Mm-hmm.
you can estimate what that property is going to be future value.
Mm.
And if you're like, man, this property is going to be X, it's going to be worth X amount. I know that any lender will refinance me at 60 to 70%. That 60 or 70% will cash out this balance that I owe.
Mm-hmm.
But my thought process is, why cash out that balance at 120? Why not come back and be like, hey, I got cash right now, and ask for a discount?
Mm-hmm.
So what I'm trying to tell you, and I'm going to tell you again, I'll tell everybody again, listen to what I'm saying. Did it really matter that I offered 225 if I'm going to come back and discount it by 25?
Yeah, but that's the long game. You got to wait a few years, right?
If you ain't willing to play a long game, you can't play this game, man.
Yeah, I agree with you. And I'm barely getting into that too, because I started in wholesaling.
Yeah.
Wholesaling's transactional.
We do wholesaling also. I mean, look, a lot of times people walk into our office, that's all they see, because that's what takes up most of the room. But wholesaling is only really like 30% of what we do, man.
Yeah. You portfolio. You like to buy them. And
we portfolio a lot. We do a lot of creative financing, wholesaling, subtailing, stuff like that. Yeah.
So you built a sizable portfolio.
Yeah.
And mostly creative financing subject to. Meaning that you never really got banks involved, lenders, and you used the other people's credit, right?
To this day, we've used hard money a few times on some flips, but we've never used lenders or credit for any property that we own. As a matter of fact, there's not one property in our name.
Really?
Not one. And as of 2015, all our properties are in trust, with the exception of a handful.
Really? So
that's to keep all you guys from trying to find our shit.
So there's with subject twos, one of the concerns with people is the due on sale clause, right?
Yeah.
So the due on sale clause, guys, is when the bank can call the note, right? When they see that the deed has been changed. Is that right?
Yeah.
And how do you get around that?
So for us, it's not a concern. I mean, look, I've been dealing. Of course, I'm plugged into a lot of people that do sub two, some attorneys and stuff, and I've had to pay to these things off.
Really?
But we've had a lot of experience since then on how to avoid them.
Okay.
Look, I've never worried about the due on sale. Most lenders, if you're performing, they're not going to call the note. Now, don't take my word for it, guys. It could happen. But here's the thing. I'm going to share some goal with you right now. This is how I mitigate risk. If I'm going to take a subject to into a short-term transaction, meaning I'm going to hold a very, very short period, I'm going to take it into an LLC. And this covers, what I'm about to share with you covers several things. One, because I'm going to get a POA, and that POA will allow me to do what I need to do with that property. And I can sell out of the LLC a lot faster than I can out of the trust. Although in the last 2 years, we have figured out how to sell out of the trust very easily, even though the trust don't have an EIN number. So just FYI.
Oh, wow.
Now, if I'm going to hold long-term, I'm going to put that into a trust, a land trust rather. And the reason I do that is because if the person I'm taking the property from dies or gets lost on me or gets deported or whatever, the POA is no good at that point. But the trust never dies. And I'm the trustee. You see? So that's why we do long term. Now, getting back to your question of the due on sale, a lot of attorneys that I speak to will say, well, man, it doesn't matter. You're changing the deed, so you don't have any added protection putting it into a trust. So they think I do that. They think I put it into a trust because I'm trying to protect myself against the due on sale. I'm like, look, man, that's the last thing I'm worried about. What I'm worried about is this guy getting lost on me or dying. And I want to be able to have that property in a trust so that I can continue to talk to the bank as a trustee. That is why I do what I do. And when I talk to some attorneys, when we're talking about sub 2, I always ask them, if I don't know them, I'm like, how many do you own? How many do you own? Because if you don't own any, I get it, you write the paper, but if you don't own any, if you haven't dealt with these type of deals on the back end, then you don't know. You see? So I'm not worried about doing so.
Yeah. So, did you learn all that through trial and error?
Yeah. I mean, look, I'm going to tell you something. A lot of people are learning sub 2. There's a lot of people teaching sub 2. I respect everybody. But I think a lot of people are taught how to get into sub 2, and they're not taught how to exit them or how to really why you should either wrap or rent or Airbnb, or we do this thing called a sub 2 swap, or we do these things called a death 2, which is really that's really our niche right there. I think that the reason people get into trouble with sub 2 is because they just don't really understand the whole concept. It's very easy to do one. The concept of it is, let me take over payments.
Right.
But there's reasons why you should do one, reasons why you shouldn't.
Mm-hmm.
Like a lot of times we do zero equity deals. People bring in brand new homes. I'm looking at this, no rehab. That's perfect. If it's a military guy that has orders, there's no reinstatement, there's no equity. I don't care, but I can make money off of that because I can take that property and I can Airbnb it. I can rent it out. I'm going to capture the appreciation. If I hold it for, my objective is hold it for 10 years. The property's being paid down, so I'm making money. If I'm paying a reinstatement, I don't want to keep my money trapped. What I'm doing is I'm just wrapping it, getting all my money out, but the interest rate that I set for whoever I wrap it to is at, let's say, at 9.5. I have a 3.5. My balance is being paid down. Now I lose the appreciation, but I'm making monthly. I'm making a monthly ROI. There's a lot of ways to skin this cat. You just have to figure out what your exit is.
So you would buy houses with no equity?
I have many houses that have zero equity.
Would you buy with upside down?
We have bought a few houses that where the equity is upside down, but the upside was the ROI, the monthly ROI. So we were making positive cash flow, but there was an imbalance in the value of the property. So we've done that. We've also done it where we have zero equity. And these are the beautiful ones. We did a lot of these in Killeen a few years back. Actually, we just saw one in Killeen where we made close to $100,000. Right. We took over a property that nobody wanted, not even sub 2, because you had to pay $25, or I think it was like $30 every single month, and you couldn't rent it out for more. We're like,
you were paying to keep this property
to supplement the loan because we could only rent it out for so much. I think we were paying like $30 or something, and we're like, that's no brainer. We do some right now, and after a while, what ends up happening is the every house will appreciate.
Yeah.
Unless you're in the depressed market, the property appreciates, rents go up. At some point, you'll balance out, and then you'll be positive. But if somebody tells me, hey, you can have a brand new house, you don't have to reinstate it. It's brand new, or even it's a few years old, but man, you can only rent it out for $1,800, and the payment's $1,900. Okay, give it to me.
You'd buy that?
Hell yeah, all day. As long as the house is new and it's not behind, I don't got to put work into it. Why not? Why wouldn't I spend $100 a month to have a brand new house, and I know that at some point that's gonna flip?
So you pay $100. So you're paying $1,200 after taxes a year.
Of course.
And in 5 years, you spent $5,000, $6,000.
Yeah, but that property, if
it appreciated $50,000.
Let's say it's appreciating by 5%.
Yeah.
And then the balance is getting paid down.
Yeah.
It's all day long.
That's interesting.
It is.
I never heard of that. That.
That's because those are Uncle Charles secrets.
Dang. So okay. Just for instance, you say you were paying $30 a month on a property in Killeen.
Yeah.
But you cashed out $100,000.
Close to it, yeah.
And over what was the period of time?
I think it was like we took it down in 2019.
Dang, you just sold it?
We just got rid of it, yeah.
So you paid $30 a month for 4 years and made $100,000?
No, it was only for about a year and a half, and then it
went positive.
And then we're positive, yeah.
Dang.
But people give up deals like that all the time. We're like, I don't want to pay $30.
Yeah. I don't know. That's interesting. You're just changing my mind on it because I don't think about that.
You want me to blow your mind right now?
Yeah.
You don't want me to do it, man. Okay, so a lot of times people ask me about creative financing. Okay, and so we get these type of deals. We hold a lot of properties in trust where we can't get title because somebody didn't capture the property wasn't deeded to them correctly, but they want to sell. What people don't understand is you can still sell as long as you disclose. But we did one that I always talk about. It was in Galveston, and the lady's like, "Hey, man, I want to sell. The property's worth a lot of money." And like 365, and I'm like, look, you can't sell this property. You got it. She actually got the deed. It's called a conversion deed. So she actually went to court, got divorced. The court awarded her the property, but they can't award her ownership. They awarded her possession and interest from her husband. She went and recorded it. She got a conversion deed. I never heard of that, and I was like, well, look, if you get the title's going to want to find the original owners. The lady's passed away. She probably doesn't have anybody. You still can't sell. I said, I'll give you $125,000. I'll give you $125,000. I'll give you $10,000 down. These are the payment I'm willing to pay over the next 84 months, and I'll cash you out. And she's like, cool. Now what we did with that property, we Airbnb'd it. This property makes $7,500, $7,200 a month. I'm paying her hardly anything. I'm using that money to pay her off.
Jesus.
And then guess what? In month 60, I'll go back to her and be like, hey, you want to get cashed out? Get cashed out at a discount.
Wait, but so you would keep it as Airbnb forever, or eventually you'll be able to get title?
I mean, look, man.
$700 a month is good.
Here's the thing, man. When we hold those kind of properties, you can sell them.
Yeah.
Maybe not for market value.
Yeah.
But you can sell your interest in a property
Uh-huh.
as long as you disclose. You can sell possession.
Yeah.
You know, and so I'm okay holding those properties for my kids, my grandkids. Just keep them in the trust. You guys can take over them. It's still an asset. People, especially here in Texas, possession is everything.
But eventually, it's going to be paid off. It's just you own it outright.
Yeah, you missed
You
what I
can't
said.
sell it, but
so if I got 84 months on it, on the 60th month I'll go to her and I'll be like, hey, I got
Yeah.
cash right now, but I'm gonna discount what I owe her.
Uh-huh.
So let's just say I owe her, for example, I don't know, let's say 70. I'll be like, I got 50 right now. So I never care what I offer, as long as I come back. As long as the terms are acceptable to me. If I go all the way, cool. I go 10 years, I go 10 years. Go 8 years, go 8 years. But if I can come back, you know, let's just say if it's 10 years, I can come back at year 7 and make you an offer and discount you. Did it really matter what I offered you in the beginning?
Yeah,
That's what people don't realize.
Yeah.
Man, I don't want to pay $225 for a property that's worth $185. I know. Can I have it? You see? Because I'm going to go back. I'm going to make you another offer. But when I make you another offer, I'm going to show you something. Sometimes I post it. There's a picture of me and Michael where he has a lot of money, a lot of cash on a table. So we started doing this in 2013. Like, it's a lot of cash, dude. It was a lot, man. So we went to someone that we were making an offer, and I said, hey, man, I got cash. And it's like, no, I don't want to do it. I said, look, you don't want the cash? He's like, let's do it, man. So, but you can get real creative. Like, people don't understand. Like we just did this deal a few years ago. It was badass, man. Where there's 5 siblings. One doesn't want to play ball, right? And the other ones do. They all wanted $15,000. I don't know what number 5 wants. But bro, that's what, $60,000 plus they owe $25,000 in taxes, plus the property needs work. It's functional. I said, look, I'll do this. You guys don't want to sue him, I'll sue him. But I'm not going to give you $15,000. I'm going to give you $2,000, $2,000, $2,000, $2,000. Now I'm working with 8. It's going to cost me 2 to close. That's 10. I'm going to go. Now I have a vested interest. Went down to tax office, made arrangements. So I'm making payments. I rented the property. I'm making money from that property to pay the taxes. I got a 6-month moratorium from then, so all the money I'm making here, I'm paying taxes. 12 months later, send the guy a certified letter from my attorney. Hey, what you gonna do, man? He came to court. Guess what? I canceled. So went back to California. Summoned him again. Came to San Antonio. Sent him back to California because I kept postponing. By the 3rd time, he's like, okay, what do you want to do? I want you to take this $15,000.
Dang! Oh my God, guys! So now y'all see why I say he's like the real estate genius over here. He's just out here doing crazy stuff that I wouldn't even like. That's crazy. Those are cool stories. So what? So what? I just want to know real quick. What do you think of the term "balloons are for fools"? Or like, do you do balloons?
I mean, I do. I mean,
look.
Here's the thing. I would never. Very few times have we ever taken a rap from somebody. I create raps. I don't take them. We've taken a few raps with balloons but we knew that the property was going to appreciate. We look at this. We look at what the market's doing, what it's done the last 5 years, and if it makes sense, you know, we're doing right now on Ellison Street, on Ellison here, on the northwest side, bro. We took that thing down with a 10-year balloon. It's year 2, and we're going to cash it out. Check this out. We took that thing down. For like $250, the thing's worth like $375. Is in perfect condition, and we actually got it listed right now. We're gonna cash out.
Dang, 2 years.
Fuck, 2 years, dude.
So no, but what I meant like when you're actually creating the notes, or when you're offering subject to.
So when I sell on like what we call a subject to wrap,
yeah,
I don't put wraps. I mean, I don't put balloons on them. I would rather them go the whole 30 years than put a balloon on them. I don't do balloons.
So when you're offering these people to take over, you don't really offer balloons?
Well, no, because if I'm selling owner occupied, I mean, technically, I don't want to be in non-compliance with Dodd-Frank. So as far as I remember, I'm not an attorney, but as far as I remember, I mean, you can't really put balloons on owner occupied deals. So I'd rather go 30 years anyway.
Yeah.
Why would I go through all the trouble of taking a zero equity subject to wrap it just so I can balloon somebody in 4 years? I want the payments.
You want the time.
Yeah, I want the time. Yeah.
And they understand that. They understand that that's going to be on their credit.
If they oh, you talking about the person I get it from?
Yeah.
Oh yeah, they sign very specific documents though.
But you don't give them balloons like when you offer to take over subject to.
No.
You want that as long as possible.
Yeah, man. I'm not. There's attorneys that will try to get you to tie you down to that. Not me, man.
So balloons are for fools. Don't do balloons.
Balloons are for fools who work with attorneys who force them into things that they shouldn't agree to.
Okay. I just want to know your opinion on that. So we went over no title deals, how you're buying properties with zero equity and even upside down equity.
Sometimes.
Where you're actually making payments to take this house.
Sometimes.
Banking on appreciation.
Yeah.
And that was crazy, that story you told me. So you were paying $30 a month in Killeen and you made $100,000 in like 3-4 years.
We're paying more on one right now.
That's cool.
Yeah.
I never heard of that before. That's the first time I ever heard of that.
It's brother, if somebody's willing to give you a free house right now.
Mm-hmm.
If I'm willing to give you a free house right now.
Mm-hmm.
Okay. Where it's 2 years old, it's in perfect condition, they're not behind, and you got to pay $50 a month, right?
I would take that.
Yeah. Dude.
A brand new house.
Gotta tell you what. In 2, 3, 4, 5 years, you're gonna be on the right side of that.
Mm-hmm.
So.
Yeah, most definitely. What's one of your most profitable deals? Like a cool story.
I mean, we've done so many deals over the years. One of the coolest ones, though, I always talk about this one, is we have a thing we come up with called the LLC capture, and we got really good because we're real big on tax foreclosures, but. Back in 2013, 14, 15, because I think that we did this one in 17. We made close like 165 on one deal.
165?
Yeah, it was quick turnaround. But the thing was, we were looking at these LLCs, and I was like, man, me and Mike were like, you know what, let's look up this LLC, and it was inactive. And we're like, call my attorney. He's like, hey, man, inactive LLCs can't contract. Really? And I was like, you know what, let's find the owner. So what we realized after doing several of these is that you can buy the LLC. Now you have to be careful about this because it may come with problems. So there's work it sounds easy. There's some work behind this, but instead of focusing on buying the property, why not buy the LLC that owns the property? And then you fix everything with the Secretary of State, the comptroller. Now you own the property, right? You see, so. On that particular deal, it was pretty awesome. On that deal, showed 25,000. She was losing it for 25,000. It was in Monte Vista on Belknap Street. The property were like 650, and she was losing 25,000. She talked me up to 200. I'm like, as far as I go. And this is a little special thing. I said because I hardly ever ask anybody for seller financing, owner financing. I said, look, I can't give you 200,000. I'll pay the 25. I can't give you 200,000. Not right now. What I will do is this. How about I accept a reverse note from you to secure interest against me? We'll record it with the county for 200,000. I just need a 6-month moratorium. And she's like, okay. What did I just ask for?
You asked for some time?
I asked for seller financing.
Oh, okay.
With no payments.
Oh shit! So hold on, break that down because like I was lost on that. Some more moratoriums out in.
So what I is the creative. So guys, you got to be creative, man. I used a creative way to ask her for seller financing. So I said, "Hey, look, I can't give you 200,000 because I don't know if I can clear title. What I'm going to do is pay these taxes." Now, guys, there's a lot of paperwork that goes in between this. You got to be careful. But what I asked for is this: why don't I accept? Right, I'm accepting from you a reverse note that will secure your interest against me. We'll record it with the county. I just need a 6-month moratorium. What I'm asking for, I'm not making payments for 6 months. You see? Now I already knew I can clear it. But one, I wasn't trying to pay her 200,000 right there because I want to clear title. I want to get everything. I want to get reinstated with the Secretary of State, with the comptroller, and I don't want to make payments for 6 months. So, and actually, there was some added verbiage to that where it was like, hey, we can't clear title in 6 months. There's a 6 months extension. But we actually cleared. I think we cleared it like in 40 days, and we cashed out.
So what happened? You cleared the title, and you gave her $25,000.
No,
right?
we paid the tax off as 25
Oh,
grand.
that's what she owed.
Yeah,
Okay.
and then when we cleared title, we actually sold the property actually to NWA. They did the deal, dude. And when they looked at how much we were making, they were like, "Man, you guys are wrong, man." So but here's the thing. So they found the buyer, and so done, baby.
Dang, so you made how much on that deal?
That one we make 165. She got cashed out 200, and then our that company that you might want to beep like what company that was, but they made some money too. Not as much as we did, but they made money.
Dang, so you made 165.
I never saw. I contracted the property. I never saw it. I just saw it from the outside. I just drove by it. That's it.
That's crazy. And you did that by buying an LLC.
Yeah, I bought the LLC with a bill of sale.
And then you sold the property once you became the owner of the LLC.
Yeah.
Wow. Okay. See, I'm telling you guys, these tips and tricks are not things you've heard of before. It's crazy. So far these stories are crazy because I know that y'all have never heard nothing like this. These are real deals, creative deals that not everybody thinks of, right? Because usually you just think of straightforward deals, things you hear of every day, wholesaling, flipping, renting, the usual. But these stories are going way past that, right? That's some deep level real estate investing. All right, so I hope y'all are getting a lot from this. Make sure if you like this video, guys, make sure you drop a comment, you subscribe, you share with your friends and family so we can continue to spread this message. All right, so today I got hit with the strike team.
Yeah, you told me.
That was scary. I called you because I was like, well, I don't know what to do.
Yeah, tell him the truth.
I told him the truth, and luckily he was a cool guy.
Yeah.
Have you ever dealt with the strike team?
Yeah, actually, man, I know we're going a little. We've been talking a lot, but I'm going to tell the story. So the strike team here in San Antonio is a very special team for the code enforcement department. Mm-hmm. They created the strike team because San Antonio had a huge history of people just doing shady work and just getting anybody to do the work, right? And so they created this team where they go online, they look at MLS, they're always trying to find people that are cheating. Mm-hmm. Well, we got caught on a deal. We bought a deal where a lady, she lost her green tag. She rehabbed this beautiful house. It was like, wow, this house is beautiful. Mm-hmm. But she had no permits. She had done electrical, plumbing, roof, AC, the whole works, no permits. So they shut her down. But we bought the property. We're like, man, we'll take care of it. She was actually one of our agents, so we felt like we were gonna take care of her. Mm-hmm. So we bought the property at a major discount. She made a little bit of money, but she was, the hard money loan was coming up due. So we bought it. It took us a year, dude. To deal with. Look, I'm not saying nothing bad about the strike team. They were just doing their thing. Mm-hmm. It was during the time when COVID and all that stuff, so it was hard to get people to go out there. But man, they didn't hurt us that bad, but they made us open up the walls. So we had to redo the electrical, the HVAC. We had to take it out, reinstall it. All the electrical outside, everything had to be redone. Anything she did. Mm-hmm. But the reason they did that was because in the middle of the house there was a closet, and she put a toilet in there. Like you open the closet, there's a toilet, and they had busted through the concrete and they had tapped in, and they were like, "Nah, man, you guys are wrong, dude." So like we didn't do it, Yeah. So they went after everything. But the funny story is this, man. So we finally got it cleared. Uh-huh. The funny story is this: that back in the day when Mike and me first started, there wasn't all this PPC and all these estimates. It was just, hey, man, driving for dollars and bandit signs. So Vance Jackson is. From I-10 to 410 was that 2 miles or something? Mm-hmm. We went out one night. Every Saturday night we used to do this. We put bandit signs on every single pole. It was a lot of poles, dude. Mm-hmm. It took us like 5 hours.
Dang.
On Monday, we get a call. And I never answered the call. I just listened to the messages, and it's some dude. And I knew it was a fat guy because I'm fat, man. I knew it was a fat guy, man. And this guy says, "You motherfuckers." You motherfuckers, I want to get you motherfuckers, right? And we drove out there. He had cut all our signs, but we had put them like 14 feet up, so he cut them. Yeah. So I said, "Oh, you want to play?" So the next week we did it again. But we put them like 20 feet up because we got these PVCs. Yeah. Mm-hmm. He calls us again, and it was so funny, man, because he started blowing a whistle into the phone because to hurt me. Yeah. And I was like, this motherfucker. So anyway, we messed up because nobody can see the sign so high. Yeah. So last year we invited them. We run the RIA here in San Antonio, Home Buying Home Studying Association. We invited them. They were cool, man. When they came, they did a whole presentation, and one of the main guys pulled me to the side. He goes, We know it was you guys, man. We know it was you guys that put all the damn signs on Meds Jackson, man.
That's funny, man. Yeah, I just dealt with it today. I was a little nervous, but luckily the guy was cool. He saw a lot of stuff was existing, so I don't got to break through no walls, luckily.
That's cool, man.
Knock on wood, right? So that was cool. Thank God. Thank you, Strike Team, for helping me out. But you were doing good because I didn't do none of that. Thank you for understanding. Let's see. So how do you deal with competitors? We got big companies, REI, all over the nation. You do deals all over the nation. Mm-hmm. How do you deal with all that, with all that noise?
Man, the thing about this business, when you first start out, wherever you are, if you're starting out, mm-hmm. you're going to start out doing deals, and you may stay there, and that's cool. You'll never notice anything. And then you're like, man, I want to do this other stuff. And you start going up, and then maybe you start getting some headway, and maybe some people start following you. Next thing you know, you're on social media. And look, you have to decide. You can do just real estate, but at some point you may decide a brand, because maybe you have a good following, like Clutch. Clutch has a good following. You have your branding. Mm-hmm. You're not only branding the Clutch brand, you're branding JR, right? Mm-hmm. And that's kind of what happened to us. We started to are we just doing real estate, or are we creating something? Mm-hmm. Are we creating a company? So we started branding HBHS, and when you start branding, you start noticing things. You start hearing a lot of things. You mm-hmm. start seeing how the industry really works. Yeah. And I could drop a lot of smoke right now, man, and tell you all the shit that I know, dude, like how stuff really works behind the scenes. I'm talking about from affiliates to who likes who doesn't like who can call someone and say, nah, don't work with that dude, or hey, I mean, it's crazy, man. Mm-hmm. And for me, the way I've always done it, a lot like you, because I know, like, you're just like, hey, man, I'm just me, dude. Mm-hmm. I ain't trying to hear all that noise. Mm-hmm. For me, I'm a little confrontational, I don't, somebody says something, man, it's hard for me to, like, chances are I'm not going to keep my mouth shut. I'm going to go visit you or something, right? Not that I'm all that, because I'm not. My wife tells me, don't be getting into no fights no more, because you ain't built for fighting, right? Yeah. But what I'm saying is this, man. If you find yourself, whether it's this business or another, you can't worry about what other people are saying, man. You got to worry about what you're doing, man. Mm-hmm. You're going to rise, fall. You're going to have problems. You can't be looking at what other people are doing. You got to worry about what you're doing. And I'm going to tell you something, man. I've had sometimes people make some weird comments, and I say to them, not too long ago, man, I had somebody made a comment that I didn't like, and I said to them, look, man, let me tell you something. I've been around since 2003. I've seen people come. I've seen people go. I've seen companies go up. I've seen companies go down. I've seen cocky motherfuckers talk a lot of shit. Mm-hmm. But I'm still here.
There you go.
I'm still fucking making money, dude. So, it's good that you're doing good right now. I think it's awesome what you're doing. Just remember, man, be a little humble, because when it comes for you, you're not gonna know. It just comes. Mm. So that's how I feel about it, man. I just concentrate on my shit, man. Yeah,
no, I'm the same way. I don't get into all the I call it politics of, like who likes who, blah blah blah. We're gonna stay in this lane, and we're gonna do what we do.
Look, man, you like me, don't like me, man. It's all good, man.
Yeah, I agree with that. So, have you ever dealt with any of those people try to poach your guys, anything like that?
Man, you trying to get me to talk some shit right now, man. Let me tell you something, man. Let me tell you something. I'm cool, man, but I've had to call people, mm-hmm. and first of all, let me say, I've trained a lot of people for free in this industry, mm-hmm. and some of those people sometimes leave the wrong way, and I won't help them anymore. And there's some people that leave the right way, and I got some really good guys that have, I won't mention their names, but I really care about them. Sometimes I don't talk to them anymore because they're doing their thing, but yeah. I have some really good guys that have learned, and I never take full credit, man. I only take credit for the initial part, because it's up to the person.
Right.
You could show somebody something, and if they don't do something with it, what can you do? Mm-hmm. But I have some really good guys that I really care about, man, that are doing very well. And even if I don't talk to them, man, I think the world of them. I'm proud of them. But then I had those guys, man. I got people from that have tried to poach my, people that taking time to train,
Mm-hmm.
that bothers me, or I'll have like here. Let me tell you. Let me tell you something. You will never ever. There's nobody in this industry, dude, that will say that I called your guy without calling you first. Like, for example, like your guys. I've known you for a long time. When have I ever created a relationship with any of your guys?
Mm-hmm.
I might say hi to them, but have you ever heard me talk to them?
Yeah, no, and I'm the same way too.
And you know why?
Uh-huh.
Because those are your guys.
Yeah.
And you take time with those guys to teach them, to train them. And here I come, and I know they're going to want to ask me questions about this, about that, but those are your guys.
Right.
And I don't usually, very few times, couple guys. I've never hired people that work for other people.
Mm-hmm.
But the one thing I would never do, and it troubles me when people do this, man. And I see and I know, and I've called a few people, like, bro, why are you calling my guy for, man? I mean, why? Out of all the guys, the people all over the nation, dude, why are you calling my fucking guys for?
Mm-hmm.
Like, I get it, dude. Okay, maybe you don't mean nothing by it, dude, but you're still calling my dude, man. These are my people. I'm taking time to be here, training them, giving them data, support, knowledge, mentorship.
Mm-hmm.
What are you doing, man?
Yeah.
Like, that shit rubs me the wrong way, dude, when people do that, dude. And I don't care how you paint it, dude. Like, I would never do that to anybody, man.
I'm the same way, man. You got to respect, you know what I mean? To me, that's like a line you don't cross. You know what I mean?
It's crossed all the time, dude. I mean,
yeah. I agree with you on that. Well, I know your specialty is creative financing, but
it's up to incredible.
So that's your favorite route in real estate investing?
I mean, look, we do a lot of other stuff. We do. Here's the thing, man. When people hear us talk about this, they're like, "How do you do all that stuff?" I mean, we don't do it every day.
Mm-hmm.
We just learn how to do it. So if it presents itself, we do it. Like we do innovations now.
Mm.
That's proven to be a pretty good system.
Yeah.
Or strategy. But we do reverse wholesaling, which people don't.
What is that? I've heard of that. I don't even know what that is.
It's funny you say that because years ago, I'm talking about like 10 years ago, man. When we first heard about reverse wholesaling, we thought it was find the buyer before you find the property, which is the inverse of wholesaling, right? You find the property, then the buyer.
Right.
And it's actually what it is. When people talk about, for example, get the buy box for a hedge fund, I mean, that's really what they're talking about.
Right.
They may not call it that, but that's what it is.
Mm.
But we thought it was a system because back, 10 years ago, nobody was sharing information. Nobody was teaching.
Mm-hmm.
If they were teaching, they were trying to charge a lot of money.
Mm-hmm.
And we thought it was a process. So, for example, wholesaling, you're like ARV, 70%, rehab, wholesale, MAO, anchor, right?
Mm-hmm.
So we're like, well, shit, it might be the opposite. So we're like, how are they doing this stuff, And so we reverse engineered. And we're like, okay, listings 6 months ago canceled. They're already looking for a discount. So let's just say hypothetically it was $100,000 listing. Mm-hmm. We're discounting to 80%. So we have a spread there. If 6 months later, property is selling for 105, 110, we're going to wrap. So we're going to sell at 125, take 15 down. I'm going to offer the investor a note at 110. If I got it for 80, hey bro, you pay this $80,000. Okay, you're gonna get a note here with $30,000 of equity, 9.5 interest rate, 30-year amortization with a QM buyer. You don't have to pay me a penny. You like that? Mm-hmm. Oh, you'll buy it? Cool. So we started selling transactions instead of notes, even though it's a note. But when I sold it, it was like I'm selling you a transaction. So if I'm giving you $30,000 of equity, a 9.5 interest rate on your money. And you don't have to pay me nothing. You don't have to rehab. Isn't that a good deal? If you're a buy and hold investor, that's a great deal. Mm-hmm. The down payment on the upside, for us, that was the reverse because we're calculating from the bottom up. So that's how we were. That's how we came up with the concept of reverse wholesaling, creating transactions and then selling those transactions. Now, we didn't know it was as simple as just find the buyer. If we knew that, we probably would never came up with that.
Okay, that makes. I haven't heard too many people do that because I've heard of it, but I never done that. So yeah. I don't really know too much about that. So what is going forward, going in the future? What does that look like for HBHS?
I mean, here's the thing. HBHS, we've been branding for a long time. I think at some point we're really considering licensing HBHS.
Licensing? What does that mean?
I think we're considering licensing HBHS, like maybe HBHS Houston, HBHS Dallas. We're thinking about it. We're not thinking about franchising. We're thinking about licensing it. It's a different concept. Mm-hmm. Maybe we do more consulting than actually being involved. Mm-hmm. We've been around for a long time, so I'm really, really considering segueing more into education. I think I am like, man, I know I have the credibility for that. So I'm not the guru that drove up or was in the middle of the night trying to sell people shit. I've been doing it here for a long time. Everybody knows it. I think I can teach people what I do. So I'm really considering going more into education. On top of that, wholesaling live, man. I mean,
wholesaling live.
Yeah, wholesaling live. We did wholesaling live last September. It was the largest wholesaling live event, and I mean live, like everybody got to work.
Yeah,
you were there.
Yeah.
That anybody had ever done. People had done boot camps before, like little boot camps. You know, they're cute. You know, I'm just kidding. I'm kidding, man. But we did a whole event center, man. We put everybody to work, and what we're thinking about this next one, we're thinking, hey, man, wholesaling live, 3x that, maybe 5x it, and with a sub 2 component. That's what we call it, wholesaling live sub 2.0. I don't know yet. Don't quote me, but we're like, man, what if we did something nobody else had done? So nobody's ever done that. Nobody's done wholesaling live sub 2.0. Nobody did wholesaling live. Our objective is going to be put everybody to work. If I could put 1,000 people to work, like, hey, man, we're all going to get live. We're going to attempt to get deals. Yeah. We're going to have underwriting. We're going to have contracts. We're going to make this whole thing work. I think people are, I don't know, man. I think people are tired of just going to events and sitting down, listening to everybody's stories. Look, everybody who's already told a story has already been to an event. Yeah. I mean, how many times are you going to go? You know what I mean? I'm like, no disrespect to anyone, because I got some friends of mine that throw some really good events. What I'm saying is there's only so many times you can tell the story. At some point, what's the point? So we thought, like, hey, man, let's make this real. And that's what Wholesaling Live was. So we're Wholesaling Live sub 2.0, man. We're looking to kick it off again this September. We haven't announced it yet, but it's gonna be crazy, man. I'd love to have Clutch there as a sponsor, man.
Let's do it. I like the first one. It was crazy. I'd never seen nothing like that. When I walked in, I was like, what the fuck? Was everybody on the phones? I was like, that's crazy,
bro. That event was packed. You know, some events sometimes people leave and go and shit.
Yeah.
That event was packed from 8 a.m. to like 7 p.m. The whole room was packed. Yeah. Both days. We're gonna go 3 days this time. Yeah. And so it was crazy. I loved it, man. It was a great concept, man.
I could see it from a beginner's point of view, because like, you don't know what you're doing in the beginning.
Yeah.
You don't know what you're doing. So like to actually go, but like, oh, okay, this is what data looks like.
Yeah.
Oh, this is what you're supposed to say. This is how it comes. So it was cool. I was like, that was cool. It was like no one's done that before, so it was cool. And then you had me on stage and stuff. So man, I appreciate you on that. Yeah. Thank you so much.
Gotta look out for you, man.
Yeah. So I really enjoyed that, and you brought all the hitters to San Antonio, so that was cool.
Yeah, not all of them, but you know, I brought the ones that had showed me love, you know.
Yeah. So man, this was like a jam-packed hour. Like this was a whole course, real estate course. We're gonna chop this up crazy. Like guys, you just learned a lot about real estate investing. You can get creative now with your leads. I hope you enjoyed this. Make sure, like I said, guys, subscribe, like, comment, so we can spread this message. Uncle Charles, I know you're getting your social media popping.
Yeah.
Let's talk about that. Where can they find you at?
So actually, man, I struggled with social media for a long time, because for a long time we were just showing people what we do, but we've gotten more structured. I have a really good guy, man, that's doing our work. His name is Don, man. He's fucking good.
Big Donnie.
Big Donnie, man. I gotta give him props, man. So this dude has taken my. We created a new IG, because I actually kind of lost control of the first one. I got it back now. And in about, I think, less than 90 days, we got it to organically, I think, almost hitting 16.5 right now.
Nice.
And we have a plan for that. It's all business. It's no personal stuff on that one. It's all business.
Yeah.
Our TikTok is actually competing with yours right now.
Oh,
we're right there, man. We're on your back door.
Okay.
We're on your back.
On my head. I didn't even know it was a head.
Yeah, okay. You jumped ahead of me there for a minute. But we're gaining, man. We're like, man. He jumped quite a few, right? Yeah. So
don't be buying followers now.
Nah. So we're inching our way back up on TikTok. I think we're trying to hit 50,000 this year. You know, but no, by February.
Okay.
And then we started a new. I still have my own Facebook. I had lost control of both of them. And I'll tell you why. You want to know why?
Why?
Because when we launched Wholesaling Live, dude, we're running ads, and I don't know who was doing this, man, but they were flagging our ads all the time, man, for bad content.
Get some haters.
got some haters, man. And no matter what ad came out, man, it was just flagging our stuff. So I had to hire somebody to run ads under their accounts. And so we created a new Facebook. The Facebook, the new one is somewhere around 4,000, you know, but the IG is really popping, the TikTok. And guys, for those of you who are in this business, who are trying to get this business, or you're doing this business, or you're having some traction, I think you would attest this too. You need to embrace social media, man. I like to listen to like Patrick B. David, Bradley. I listen to some Gary Vee. He's cool, but he's crazy. I listen to Bradley a lot, man. When Bradley says, look, man, I think Gary Vee says this too. If you're not doing social media, you're irrelevant. You're going to be irrelevant, man, in 3, 4, 5 years. You got to be on social media. I get so many deals from social media, man. And guys, if you're on social media and just start off natural, you don't have to do, you do natural stuff. I do natural stuff. When we first started, I think when both of us started, I don't know, I won't talk for you, but I was trying to make content like, hey, guys, you know, I do this, I do that. And you can still find that online.
Yeah.
But now all my stuff's raw, man. I think that's what people want to see.
Yeah.
Ask for the deal. If you're providing value and you're bringing the heat and people know you're for real, just at the end say, look, guys, you got a deal, you need some help, hit me up, I got you, man. Let's make some money together. And I know you're really good at that also.
Yeah. I'm about to drop a reel right now about that.
Yeah.
I was at a property yesterday that we closed on, and it's you know, those nasty ones with Hoarder.
Yeah.
We got to walk over mountains in the house.
Yeah.
I made a little reel for that. But yeah, no, I 100% agree. Definitely got to do that. Like I said, this is the new social currency is what we call it.
Man, can I tell them what my
Yeah, go ahead. Where can they find you?
It's easy, man. It's Real Uncle Charles, REAL, Real Uncle Charles, on IG, on TikTok, on Facebook.
Okay, cool. And then one tip I could give you too, guys: be yourself. Because I remember during the Wholesaling Live, they try to like jock your whole style. Right? Like copy paste an event like that. That was wild to me. So I couldn't fathom that. Guys, be yourself.
Bro, can I interrupt you, man?
Yeah, go ahead.
Bro, the one thing that chose me the most, man, like we waited a long time to do our event, dude. But yeah, I see it all over the country, man. Be original, man. I mean, you don't gotta copy somebody's style. You don't gotta copy someone. Like, I've never copied anybody, man.
Yeah.
Anything I talk about, right?
Yeah.
If I learned it and somebody else was doing it, they didn't teach it to me. I just did it. You know, I figured it out. And so we did this beautiful event, and I know a lot of people are copying us, man. But I tell you what, there was only one Wholesaling Live. There's only gonna be one Wholesaling Live Sub 2.0, and I expect Clutch to be there, man.
Yes, sir. Be yourself always, all right? Because the people could see that BS, right? So don't be jocking nobody's style. You're cool. Be you. Guys, do you do YouTube?
I do. We started a YouTube. We have the company YouTube. We got away from it years ago. We're starting to pop it again. Don's been working on it, and I started a new YouTube. It's not getting as much traction, because it's a lot more work with YouTube. It
takes a long time,
but it's also real Uncle Charles. Yeah. So.
Yeah, for some reason YouTube is the hardest to get going the most. Like, I've been doing it for a few years and it's barely starting to get traction. Guys, so I hope you really, really, really enjoyed this video. I enjoyed this podcast. I learned a lot. I know you did. If you enjoyed it, make sure you subscribe to the channel. You leave some comments. You become a part of the community. This is what we do this for. We want to educate you and help you on your real estate investing journey. All right, so that being said, guys, you know where to find me on Instagram and TikTok, Facebook, YouTube. Everywhere's the same at JR Clutch. And man, I appreciate you coming on the show, man. That was a lot of gems right there.
My pleasure, man.
All right, guys, we'll see you on the next one. Stay clutch.